Good evening, everyone. Thank you for your patience. I'd like to call to order a meeting of the Finance Committee. Acting on behalf of the committee will be myself as chair, Councilor Gould, Councilor Manning Martin, Councilor McGinn, and Councilor Turco on behalf of the committee. All other councilors are welcome as well. First item on the agenda this evening is a motion that was made by Councilor Gould to request that Susan Antonellis and the assessor's office come in and educate the city council on how they do appraisals related to tax increases. With that, I'll turn it over to Mr. Gingrich and the taxing folks. Thanks.
Thank you. In your package, you should have a handout for the revaluation process that Susan prepared, and she's going to walk through that and then take some questions if anybody has any.
Mr. Chairman, if I may.
Yes, Councilor Gould.
Thank you. Two things. Mike, can you tell us what number that might be, please? Is it? 8N. Thank you. 8N. Thank you very much. And welcome, Ms. Antonellis. If I make a motion to receive 8N, please, Mr. Chairman.
Move to receive.
If I may, can I speak to the subject matter?
Sure, go right
Thank you.
ahead.
Thank you, Mr. Chairman. Ms. Antonellis, welcome.
Thank you.
And please, we're all part of the same team, so I don't want you to think that you're here under the spotlight or anything. You're here to help educate us.
Absolutely.
If we could, please.
Certainly.
And we're thrilled that you're here. So why don't you do your thing, and then I have some questions that prepared. Maybe you can answer.
All right.
Thank you.
Thank you.
Thank you, Mr. Chairman.
Everybody has the handout. Well, basically, the assessing department is governed by Massachusetts general laws and the Department of Revenue. Our goal is to assess property fairly and accurately to the best of our ability. We are required to do certification every 3 years by the Department of Revenue. The current cycle was 2007, 2010, 2013, 16, with the next one being in fiscal year 2019. That will be changing to a 5-year cycle beginning in fiscal 19. And what that requires is the DOR has mandated statistical requirements upon the Board of Assessors to meet based on the sales of all the properties in the city. In addition to that, we have to do a door-to-door inspection of every property, or attempt to get into every property, once every 10 years. That was last done in fiscal 13 and will have to be done again in fiscal 2023. The next page of the handout just gives a breakdown of the parcel inventory for the city, how many single-family homes there are, how many residential condominiums, 2 families, 3 families, apartment buildings. All of these properties need to be valued annually, and that is achieved through the mass appraisal process. The next page shows the 3 approaches to value that we can use. We can value property based on the cost approach, the sales comparison approach, or the income approach. The cost approach is based on the principle of substitution. It is based on an estimate of replacing or reproducing the building, less depreciation, and including the value of the land. The sales comparison approach, which is typically what we use, is for generally residential properties, specifically single families and multifamilies, to compare like properties, like single families, like capes, like ranches, like colonials, in a like neighborhood with the same similar characteristics. The third approach to value would be the income approach to value, which is based on a property's ability to generate income. And that is used for commercial and industrial property and apartment buildings, hotels. So every year we go through the same process. we reviewed the sales. There are over 1,200 sales that take place in the city of Peabody on an annual basis, of which, of those 1,200 sales transactions, approximately 45% of them are considered valid arm's length transactions, meaning that they are a sale between a willing buyer and a willing seller in an open market under no undue influence. And what we need to do is to determine that the sales are valid or not, because we're going to use the sales that we determine to be valid to determine the values of properties that haven't sold and apply those same parameters to all the other properties that haven't sold in order to arrive at our values. That's what we use for residential property. For commercial property, we use income and expense information. We send out about 800 or so income and expense forms to all the commercial, industrial, apartments, hotel properties, and ask them to return to us annually what are they receiving for market rents, what is their vacancy, what are their expenses for particular types of properties, whether they're apartments, whether they're hotels, and also we analyze that information based on neighborhood. We look at what's going on Route 1, what's going on Andover Street, what's going on downtown. We also review cap rates. A cap rate is applied to those properties that are valued based on an income approach, based on that property's ability to generate income, and that derives the value. Once we analyze all these sales that take place, the income and expense returns that we have received, we send out second notices if we don't have a good sample, because we need to have a sufficient sample in order to develop our tables to apply to all the other properties that haven't sold. And then we update our tables after we review those and make adjustments as necessary based on costs and vacancies and expenses. So basically we do the same process every year. For this coming fiscal year, fiscal 18, which we will be starting July 1st, it will be based on an assessment date of January 1st of 2017. So by the time those values are set, they will be issued on the tax bill that is going to be issued in December. At that point, the values are already a year old, because we are using sales that took place in calendar year 2016, not the sales that took place during this calendar year. We'll look at what's going on during the market at this time for next year. So we're always a year behind the market in determining our values. So when the market is rising, our values are lower because we haven't caught up. We're always a year behind. When the market is declining, our values tend to be higher because we're always a year behind. Once we submit everything to the Department of Revenue and we meet their statistical requirements for all the various classes of property, for residential, it's broken down by single-family homes, and then condominiums and multis and et cetera. And within those classes, it's also broken down by style and location and size and condition. So there's a lot of different parameters that have to be met before the Department of Revenue will let us come before the council for a classification hearing. Once a classification hearing is held and the tax rate is set, then we can send out the tax bills that have to be in the mail by December 31st. The tax bills are due by February 1st, and any abatement, if somebody were dissatisfied with their value, they certainly have the right to appeal their valuation. They have to do so by the same due date as the tax bill, February 1st of every year, and they have to file an application for abatement, which is available on the city website under the Assessors Department. Also on the city website is a lot of information that we've put out as to every single property in the city. We have There's different maps, there's photos of the buildings, there are what we call property record cards that have detailed information for every single property that consists of information such as how many bedrooms, how many bathrooms, what type of heat, the size, if there's any sheds, pools, other outbuildings, garages, the condition grade that we have assessed, and information such as that. So we would encourage everybody to review their property record card. That information is updated annually on the city website for when the bills go out in December, because again, the deadline to appeal it is February 1st, each and every year. In addition to that information that's on the city website, we also have information concerning filing the abatement, as well as filing exemptions for those that are widows or blind, disabled veterans, etc. And also, as well, are the sales reports of all the properties that have sold in that prior year of what we're using in our analysis to determine the values of the current fiscal year values. So that is it in a very quick summary, if anybody has any questions.
Councilor Gould.
Thank you, Mr. Chairman. Thank you, Susan, Ms. Antonellis. Thank you. After an evaluation is done, what is the process from there? The input of the data?
Well, we typically don't change values. I mean, we change values every year, but we do it based on a statistical analysis based on the market. So we're adjusting not individual properties individually, but by a mass appraisal approach. When we go out, because we inspect building permits on an annual basis as well, we'll go out and make inspections of that and change that data individually. If we see properties that have sold, we'll look at MLS to see if, based on what the MLS listing has, if we're missing any data that we could add information. If they have a finished basement or central AC or whatever the case may be, we would pick that up from properties that have been listed on MLS. We also send out sales verifications to all new owners of properties, asking them to tell us if there was any unusual circumstances in the sale so that we can determine if that is a market sale or not, or if they've paid, if they've had seller financing, if it was a foreclosure or a family sale, we want to omit that from our analysis.
Do we have a company that assists you in doing that, or I can't believe your staff could track all of that?
Do the 10-year thing, certification and inspection, a company is hired to do that, because that's going to 16,000 properties to physically remeasure, attempt to get in and re-inspect.
So
we don't do that.
How about MLS data when that gets generated?
Daily. We look at that daily.
You do?
Mm-hmm.
Wow.
Yeah.
Very good.
We get sales daily from the Registry of Deeds. So if a property sold yesterday, we have it today. We get it the next day.
Wow.
And it's
And
recorded at the Registry of Deeds to update the ownership information.
how big is your staff?
Currently 4, with
4.
one opening available.
So somebody sits and goes through MLS every day, and,
Yep.
and then when you get that data, can you explain? Because
What we have is a computer-assisted mass appraisal system. Our system, there's many systems out there. The one that the city of Peabody has used for, I believe, more than 30 years is Tyler Technologies appraisal system that we are familiar with, but there are other appraisal systems out there that other people might be familiar with, Patriot Properties or Vision Appraisal. But basically, it's a database of all of our information, every single parcel and all the data involved with that parcel. And we run statistical analysis and determine what needs to be adjusted based on sales. If we see that the capes in a certain neighborhood in South Peabody are selling for higher than the ranches, then we make those adjustments. But it's all based on the market and what has sold a year ago.
you get right down to the grassroots of it. You get MLS data or you get sales data.
Mm-hmm.
What do you do? What do you physically do? Update that piece of
Update
property?
that information, send out the sales verifications, potentially go out and inspect the property if something is very different from how we have the property listed.
Okay. After a home is built or a remodel is complete, is there a process where you tie in the reevaluation with the building inspector? How does that?
Annually, we have to assess again property as of January 1st of the year. So we are not looking at anything that's happened in 2017 at this point. We're only looking at any building permit that has taken place as of 2016. And depending on the status of that permit, as of January 1st of 2017 is what we assess. So if the house was only 50% complete as of the time, that's all we're assessing it for, 50% complete, 50% of value.
How is the traffic influence considered? What,
Traffic influence, there's quite a few
can
properties
you
that
explain?
have a traffic influence.
Can you explain
Yep.
what that is to the council,
Yep.
please?
Traffic influence is a discount given to heavily trafficked streets, such as Lowell Street or Russell Street. Based on the sales that occur on those streets, we have to analyze that obviously there is traffic, an extreme amount of traffic on certain streets in the city that we do adjust either 5 or 10% for because of the traffic that those houses sitting on certain streets receive. And the sales reflect that. The sales reflect that if a property is sitting on Lowell Street, it's probably going to sell a little bit less than a property a street back because of that traffic influence.
Could you collectively say that all of the major streets get a discount? Like a Linfield Street or a Washington
Yeah.
Street or,
Yeah, they should. Yes.
okay,
Yep.
okay.
Anything else, Council Gould?
Yes, please. If a correction is made where a homeowner has brought to your attention that they don't have central air conditioning or they don't have a full bath, it's a half bath, is there a reevaluation made and is there a rebate that's given to?
If they file an abatement, there is.
How
They have
far-
to file an abatement timely by that February 1st deadline. And then the abatement would be adjusted and it would be credited on the next tax bill, or if that tax bill was already paid, it would be refunded.
And how far back, say someone has been billed for having a second full bath, and it's really been a half bath for 10 years?
1 year. You
1
can
year.
only, you have to file each year. The value is set annually on that December tax bill. You have until February 1st to appeal it. If you don't file by February 1st, that year is over, you gotta wait for the next year. In the same respect that if somebody had 4 bathrooms and we were only assessing 2,
Yeah.
we can't go
No,
back
no.
and
I get
charge
it.
them for that
Yep.
as well.
Yep, I agree, I agree.
No,
What is considered living space? Is a garage living space?
garage is not living space.
Garage is not.
No, no. A lot of garages are converted to living space, but living space is living space. It's heated, finished living area. Garage is a garage.
Okay.
A lesser degree of cost associated with a garage than living area.
Just an example, if 2 houses are almost identical, 2 capes right next door to each other, would you assume that they are assessed equally if they have the same amount of baths? And
They should be similar. They probably don't have the same exact land or the same exact square footage. There's generally something, I mean, if they were exact identical, they should be, have the same value.
okay. So for the public, I don't know if we're on live TV, but if the folks, are we, Tim? Thank you. If the folks out in the city are watching, what would you suggest they look at? Because I never really look at my evaluation. I pay my taxes. I probably should look at the evaluation and how my house is assessed. I kind of,
and
I think like most of us, I go with the flow and assume that the process is done. What would you suggest that they look at, and how do they go about looking at?
Sure. At any time, it's available now, the fiscal 17 values that were issued in December. Those are available on the city website currently, and they will be there until the fiscal 18 values are set in December. And then once those values are set, those property record cards and values will be updated. But all the information is available on the city website. www.peabody-ma.gov, sorry. And if you go to the property data on the city website, you can inquire any property at any, and look at the details.
If the folks aren't computer literate technology-wise, they can come into the office?
Come into the office, there's a computer at the counter available for the public.
But if not, you could print out a copy of
sure.
their... Okay.
Yeah.
Okay, one last question, and then I'd pass on to you, Mr. Chairman. Two houses are on a major street. One is on one side of the corner lot, another on another corner lot. Both abut a major street traffic discount. One gets it, one doesn't. Is that an error?
Probably,
That
yeah.
we
They
would
should
look
probably
at,
have the same discount.
We
if
would
they're on
look
the-
at-
If they're fronting on the same street.
and they could look at, you could correct that if they
Sure.
brought it to your attention? Okay.
Yeah.
I have no further questions right now, Mr. Chairman. Thank you.
Councilor Manning Martin.
Thank you, Ms. Santinellis.
Thank you, Mr. Chairman. What on average, if you can answer this, do you pay out in abatements annually? What's the average?
I would say less than 300,000 this year. This year was less than $300,000 in abatements.
Is that generally the average?
Well, the abatements and exemptions, like the veterans and the blind reimbursement credits that we give for those, it's all considered that. But yeah, the exemptions for the veterans and the blind and the widows, that's about $350,000, and then abatements about $300,000.
Okay, because we do have a request later, it'll be, I'm sure, referred to subcommittee for, there was a declaration of reserves for abatements, surplus in the amount of 1.5 million, looking to be transferred to other parts of the budget. So, and it says from previous years, sorry, it said from prior years. So that's several years of reserves,
Every
surplus.
year, we have X amount available to use. And what doesn't get used can get turned back as surplus. But we have to be sure that there's no pending litigation or appellate tax court cases.
So it's at 1.5, that's, say what then, 5 years worth of surplus in abatements? Okay, thank you.
Council Wall.
Thank you, Mr. Chairman. Through you to Ms. Antonellis. I guess if you could, explain to me when somebody files an abatement, exactly what the process is for them, and at what point would you require that they have to have an appraisal done on their property?
Okay. For a residential property, typical single-family home, condominium, the process is they need to file the form with us by February 1st. The Board of Assessors has 3 months to review it and act on it. The action that the board can take is they can approve it and grant an abatement. They can deny it outright, or they can make no action on it whatsoever, and it essentially is just deemed denied due to no action. Generally on residential properties, we look at them, we see what the reasons are for the abatement. We determine whether or not an inspection is needed based on their reasons. We determine that sometimes people need to file for an exemption as opposed to an abatement. We look at sales. We look at what we have for like properties in the neighborhood that have sold, and we make a determination that this is a valid assessment or not. If there was an error made, we'll make an adjustment and grant the abatement. Depending on the determination, if an abatement is issued, an abatement certificate goes out showing the adjusted value and the adjusted tax. If it's denied, a denial notice goes out. For the taxpayer, they certainly have the right to come in and talk to us if they disagree with either the denial or if they don't feel that the abatement was enough. In the case that we feel that our value is accurate, and we say, no, your application is denied, their next step in the process is to file an appeal at the Appellate Tax Board in Boston, which they have to do so within 3 months of our either denial or abatement notice. So there's a lot of time constraints. And then once they file at the Appellate Tax Board, then a hearing is scheduled. Generally for residential property, generally residential property owners don't file at the Appellate Tax Board. For commercial property, the process is the same. They still have to file by February 1st. We take a look to see if they have submitted their income and expense form that we requested. If not, then we'll request it. If they don't comply with sending it to us, then we would deny their application because they haven't complied with our request. If they send it to us, we review it, we feel that either an adjustment is warranted, we grant the abatement, or we deny it, they still have the same process. They would have to appeal that, if they so choose, at the Appellate Tax Board. At that point, there's 2 ways to file at the Appellate Tax Board, formally and informally. If an applicant was to file formally, then an appraisal would be needed at some point down the line, but the process for hearings at the Appellate Tax Board seems to take a year or so before they get scheduled. So, you know, there's always that time to negotiate and come to an agreement if need be.
Okay, and you mentioned that on average you have about $300,000 in abatements annually. Of that, how many actual abatements are granted? How many are filed? How many are granted?
I want to say that there was about 130 applications last year out of 10,600 properties. And probably 40 or so were granted. You know, but, you know, we're talking, you know, if somebody says that they don't have an extra bath. I mean, you're talking a $5,000 value adjustment. You're talking $60 for an abatement. So, yeah, that's, a lot of them aren't significant.
Thank you.
Counsel McGinn.
Thank you, Mr. Chairman. Through you to Ms. Antonellis. Of the 3 approaches to valuation that you explained to us, I think you were pretty clear that the sales comparison and the income approach are the most common. When might you use the cost approach?
Well, we use the cost approach essentially for every property. For residential property, we have a cost approach and a sales comparison approach. And for commercial property, we have an income approach and a cost approach. So we do have the ability to use a cost approach for properties like City of Peabody property. Something that we don't have an income stream to derive a value for. But essentially, we have 2 approaches to value to every property.
So you use one to validate the other, basically?
Exactly, and they have to correlate. They have to have a correlation within 10% for residential, 15% for commercial.
So when you're listening to this, it sounded like you kind of make a judgment call between the 3, but that's not really accurate. You really are using the cost approach for all properties.
All properties.
And then you validate that with one of the other 2 methods, depending on what type of property it is.
Correct.
Okay, that makes sense. Just one other quick question, and I think you already answered part of this. You had indicated that only 45%, did I hear you correctly, of the transactions are arm's length transactions? So that's a huge chunk that are not arm's length transactions. And I think I heard you say that foreclosures and family sales would be categorized as anything else that would be categorized?
Just putting property into a trust, sale for $1 between family members, or putting it in and out of a trust multiple times during the year. Foreclosures, family sales, short sales. So we have to weed all those out. We don't want
So
those in our analysis.
but that's the majority of the activity, really? Okay, great. Thank you, Mr. Chairman.
You, Counsel Gould.
Thank you, Mr. Chairman. Sorry to come back. Ms. Antonellis, can we talk about the instance where a homeowner gets assessed that there is a second bath, for instance, or a full air conditioning, and that happened in 07, 09, or 07, 2010 or 13, which are the 3-year cycles. And that home gets assessed for a full bath, a second full bath when they don't actually have it, and gets assessed every single year. Yet, when they file the abatement, we only allow them to go back 1 year.
Correct. They have to file annually. Yeah, I mean, mistakes do happen.
No, I agree. And there's nothing in the regulations
Correct.
that correct that error that we made.
Correct. Right, because when the value is
So there
issued-
could be a 6-year, if it was done in '07 and not corrected by any, oversight, maybe an oversight, but this particular house not calling it to your attention, the homeowner not, there could be 7 years of $60 a year as you gave it an average. That's $420, that's $500. For some folks, that's a lot of money.
Yeah, well, the values are set each year. So each year is what needs to be appealed, the value that is set for that year.
Correct. But again, if there's not a second bath, they've been having been billed for a second bath for 7 years.
Correct.
Or it could be 9 years or 10 years. And there's no process for them to appeal? Is that the tax appellate? Is that the process?
No, because there's no original filing on this level. There has to be a timely original filing locally first. You can't bypass local and go right to the appellate tax court.
Right, but if they don't get any satisfaction with us at the local level, it doesn't seem as though we should not have a process where we could address the error that we made, not they made. They don't have a second bath. Wow, there's something missing.
Unfortunately, that's Mass General laws. We set the value annually, and it can be appealed annually.
Rep. Walsh. I'm kidding. Wow, okay.
All set, Council Cool. Councilor
Yes, thank
Charest.
you.
Thank you. You said the bills need to be sent out by December 31st,
Correct.
and the due date is February 1st. So it really leaves 1 month.
1 month.
Do you find that there's a significant amount of time for people to go online or come down here to check to
Well-
make sure like we don't fall in that pass?
Well, again, that's under Mass General laws.
So
that
that's set by
timeframe.
law,
That's set by law. It's printed right on the tax bill
right?
to file the abatement by the deadline of
Right.
February 1st. It's on the website
So PBD doesn't have the chance of saying, we'll move it to
to
March
change it.
1st?
No.
It has to be.
Statewide,
Yep.
it is February 1st for quarterly tax billing.
Great.
Unless your bills don't go out by December 31st.
Oh, and what happens
So
then?
then you have additional time, but our bills always go out by December 31st.
Okay.
Before then.
Right. Like your W-2s will always go out, right? And when you say, well, one more question. When you say there's a discount for certain circumstances,
Yes.
is that discount listed on their tax bill that they received that discount? Or is it
Yes.
automatically, okay,
Yes, there would be a credit. There is a field on the tax bill that says abatement/exemption, and there's a number of whatever that amount is, $400, $700, whatever it is that they've applied for and received. But
Right.
that does show up on their tax bill.
and they have to ask for that
They
each
have-
and every year?
They have to file an exemption application every year, yes,
Okay,
to get that credit. We mailed them out in July for the current fiscal year, fiscal 18. We'll start July 1st. We'll mail out the exemption forms during the first couple of weeks of July to all those that received one in fiscal 17, saying that they need to file again because there are different requirements based on income and asset requirements that they have to meet. And then they have technically until April 1st of the following year to file. They have a big window to file an exemption, but not an abatement. maybe 2? No, just 2 applications maybe are filed, yeah, yeah. Well, they can give us a change of address, or, post office can be forwarded to their, winter address. Yeah, that's fine.
Council Turco.
Thank you, Mr. Chairman. Through you to Ms. Antonellis. In line with Councilor Gould's question, and I think what was missing there is, I understand your point with you have to file by February 1st for the abatement for the prior year. But I think, and forgive me if I'm wrong, Councilor Gould, but if a resident has filed and told you that there's an error, and then that error continues even after the resident has told you, is there an abatement?
Only if they file for the following year, or the following year, whatever years that they're looking for.
So even though they've already told you that there's an error in 2010, they have to keep doing this every year?
If it's still incorrect, they would need to file.
And it
Yes.
has been.
If they still is incorrect, yes, they would need to file.
Right, so in this case that we're discussing, this has been incorrect for several years for the same resident. So if he files for an abatement this year, is there any way to guarantee that that correction will be made on his property card?
You should look at the property record card when the value is finalized in December, and it's put on the city website, what the value is, and look at the property record card at that time to see how it's being assessed. And if it hasn't been corrected by that fiscal 18 assessment, an application needs to be filed.
Okay. And the last question, because your process seems very, very thorough, and I'm just wondering if a resident did come in and file for that abatement and said, I don't have an extra bathroom and I don't have central air conditioning, how could we miss that? How could we not enter that into the system when you've said that you look at the MLS every day and you look at all these issues? So this, a resident handed into your office a certificate stating what they had, and you granted them the abatement in that year, so does that paperwork get misplaced, or is it just?
No, I think it would be a data entry error, to be honest. It should have been corrected. If it wasn't, the process is to file again.
Thank you.
Unfortunately.
Council Garabedian.
Thank you, Mr. Chairman. So a quick question is that on all the houses in Peabody, how many do you think you don't get into?
Oh, a lot. The last door-to-door inspection for fiscal 13, we probably got into 35%.
So then you just take whatever you can get out of the listings of their homes and all that, if they're, so yeah, okay, so, and I gotta find that, that process is tough, but it's kind of like, some of it's shooting from the hip.
Oh, you make an estimate. If you're in a typical neighborhood of ranches with 3 bedrooms, 1 bath, and there's been no additions, that obvious, then you would assume that this is a typical 3-bedroom, 1 bath home.
I get that. I guess the trick word there is assume, because we know what that means. But anyway, let's take my my house for an example. I didn't know that I'm on a corner lot and on a busy street that I would get a credit. Now, so I would have to go. I've been in my house for 35 years, roughly. Obviously, it's not retroactive.
It's
But-
not retroactive.
Okay, so, and then I would have to go and say, hey, look at this is where I'm at. But why wouldn't the assessors that at least know that? So I'm sure there's thousands of people that don't know in the city that if they're on a busy street or a corner, that they're not gonna, that they could get a credit, that they don't know that.
No, we try to review our traffic adjustments and make sure that everybody on Lowell Street is receiving, and typically we do that by running a report. Give me every address on Lowell Street. If your house is on the corner of Lowell and something else, and your actual address is not Lowell Street, we could miss that because it doesn't have a Lowell Street address. We do our best to try to find corner lots such as that. to try to make it even, fair to everyone.
So it's Lowell Street, is it Russell Street, is it Lake Street? So
County Street.
yeah, so there's a lot of these, you know, so I guess my point is it's done every year, and every year we don't do 100% of what's supposed to be done for the people of the city of Peabody, basically. I mean, nobody has told me that I could get a credit.
You may be getting it.
Yeah, I don't think so. But I never look at it, but I mean, I'm sure there's a lot of people that don't know, so is there any way that people can get educated on this?
Yeah, I mean, we could put something on the website. I mean, we do have a frequently asked questions on the website of different items. I don't think traffic is one of them, a traffic adjustment, but that's something we could consider putting on there for the busy streets.
Yeah, no, that's good. I mean, I just try to get an idea of how it works. I mean, I have a ranch. I'm in West Peabody. And if you don't go into my house, you wouldn't see the two additions in the back because they're not up, they're in the back. So, and I'm sure there's a lot like that. So, I mean, I don't know whether we're missing things.
Well, if you took out a building permit, we would know.
Right.
If you didn't take out a building permit, we wouldn't know.
You all set, Counsel Garabedian? Well, how much was the credit on your bill? Yours, yeah. Oh, file an abatement. Anybody else have any questions on this topic? I have just a couple of comments. One, it's probably pretty obvious to all councilors that it's not a science by any stretch of the imagination. It's the best estimate of what they can do with the data that they got. And but you can clearly see from the abatement process that there's not a lot of incentive to file an abatement because you got to get it inside of a small window. It's then subjected to a review that may or may not be a physical review. You can be rejected on the spot. And if you really want to pursue it, you can then go to the state within 90 days and be able to go, you know, hat in hand, represent yourself or hire a lawyer. At the time that you think about that, the cost may be greater than the benefit, so you say, it's just not worth it. So it's really not a system that, to me, incents a lot of people to want to go do that. Commercial entities tend to do it more because they'll go to an agency or somebody that'll take a percentage of the savings to, you know, represent them on their behalf. But it's a lot of work. So, and the fact that you got to do it every year, even if you point out an error, if it's not a corrected error, then it's kind of a bit of an aggravation. My bigger complaint with the whole system is the way commercial properties are done, because I think there it even gets more convoluted. For instance, you indicated that it's income and expenses. Is that on a cash or an accrual basis?
We look at the market rates.
Well, clearly, if it's on a cash basis, then there's a whole different representation of what income is than on an accrual basis. If, for instance, a building is being fully utilized but at a loss on an accrual basis because it's being accounting depreciation, then that represents one number. But if it's on a cash basis where you're going against what your mortgage is, it's another number. So it just, to me, it's almost questionable as to how you come up with an income. And in that perspective, the value of the building itself is also represented in the tax bill because you're taking both a combination of cost and income. And then to add a third step to it, the city then backs into an equalization rate to assess what the real tax dollar amount is going to be based upon that final assessment. So it's kind of it's a very not only confusing thing, but for instance, is it true to say that if the North Shore Mall lost two major stores, would they receive a significant tax decrease based upon the fact that they lost that income, or is it augmented up by the value of the property given its proximity to the highway and its perhaps better use in the market?
We look at their net operating income, and then we would potentially make an additional adjustment for vacancy if they tend to have more vacancy. But that's looked at annually.
Yeah, and it's in arrears, so you know, it could be you're paying a lot of extra tax based on vacancies that you have in a current year, and that's why a lot of times when we'll see when we get in the budget session, or in the classification section, we see the tax amounts that individual properties are paying, and it looks like they got a tax break, but the break was no break based upon the fact that they've lost a lot of money to sustain the facility because it's vacant. So it's one of those little conundrums that exists in how this whole process goes, and I think very confusing particularly on the commercial side. And the residential side, I kind of get it, you know, it's cost comparisons mostly, but on the commercial side, there's a lot of variables that come into play that we don't have a whole lot of control over. So. And to Councilor Garabedian, a commercial property located on Main Street doesn't get any discount for traffic. So
They want traffic. They want traffic.
just saying. Anybody else have any other issues associated with this? I want to thank you. It was a nice, clear explanation of how things are done. I appreciate it. And if there are no other questions, we'll move on to the next item on the agenda.
Thank you.
Thank you, Ms. Antonellis.
Next up on the agenda is Councilor Walsh's request for a review of the city's insurance program. Correct, Councilor Walsh?
Thank you, Mr. Chairman. I brought this before the committee. I had read a couple articles late last year, I guess, on municipalities and making sure that they are covered properly, and I was just hoping that we would be able to be assured that Peabody is. Part of it was about adding new facilities. You know, we added the pad in Ward 4 for Bob Driscoll's skating rink. We have the properties at 2 Washington and St. Paul's now. There are other places around the city where we are upgrading. We're talking about a dog park at some point. So the questions are, not only are the buildings insured, but are we covered properly liability-wise? Some other pieces of this, if it can be addressed, is, you know, one of the articles talked about volunteers. And, you know, in South Peabody last week, and a lot of people volunteered at the South School, at the playground. And do we have liability if something had occurred to anybody in an instance like that? So I just want to know that we're okay with that. The other piece of it was we had a discussion, I think it was budget time last year, when we talked about we have employees in the city of Peabody who use their own vehicles for business-related activity, for city-related activity. And if they're using their vehicle are in an accident, who's liable? How are they covered? How are we covered? So any of those answers would be helpful.
Mr. Gingrich.
Councilor, we're hoping to answer all your questions here tonight. We've left a handout on each of your desks, and we have Mike McShane here. He's our insurance rep.
Motion to receive the handout by Councilor Turco. All in favor, any opposed?
He's going to go through this, and he can answer all the questions you have. Mike?
Thank you, Mike. Good evening, everybody. Can you hear me okay? Sometimes at the height, it doesn't always work. I can hold this if need be.
I've never had that problem.
On the first, this is a pretty quick presentation, and then your specific questions, we can go back into those one by one. But at a high level, from a property standpoint, I'm looking at page 1 of the handout. We insure the city of Peabody from a property standpoint on what we call a blanket basis, meaning we list all your properties out, and we have a separate document that it's a statement of values, it's a listing of all the city-owned properties, and we simply total them up from a value standpoint, and then we have contents in those properties as well, and that total is $303 million, speaking in round numbers. Approximately $266 million in building value, and approximately $37 million in contents. And what a blanket coverage means is, should there be a claim at any one location in the city, there could be upwards of $300 million to go towards a city-owned property. The deductible associated with your property insurance is $10,000. You also have what we call equipment breakdown coverage, and that would be failure of equipment that's used to run the building, namely, heating and air conditioning type equipment, boilers that you have in the building, losses that should there be a sudden failure of some of that equipment. That's also included. That's upwards of $100 million. And then we have flood and quake. I know flood is a interesting issue that we have in Peabody. I know it quite well. The $2.5 million in coverage we have is a blanket, again, of flood coverage that covers city buildings that are not located in a flood zone. Buildings that are in a flood zone, namely right across the street, Central Fire, the garage, fire prevention building, police station on Allen's Lane, and there's some other locations too. We have separate flood coverage for those buildings should the water rise. And we've had claims, obviously, on those buildings. We buy that through the National Flood Insurance Program, which is a federally administered program. While we're on property, I'll speak about the vacant properties that you mentioned, because the one caveat in this blanket limit, you might be thinking $300 million, oh great, we're covered for everything. Your vacant buildings are covered, but the standard insurance market, you're with Argonaut Insurance, and they're standard market, as we call them. Standard markets do not like to insure vacant buildings. Bad things happen to vacant buildings. They can get vandalized, they tend to burn, they tend to leak. We insure those buildings separately as they come up, and we can go through that. Washington Street is covered separately, and Tilly's Farm has one vacant, I believe there's an old homestead there that's vacant, at least at the moment. That's covered separately as well. Turning the page to liability. So liability, bodily injury or property damage that occurs arising out of the activities of the city of Peabody. You have a $1 million limit. Above that $1 million limit, you have an additional $2 million umbrella limit. You see that occurrence limit, $1 million. The $3 million aggregate limit that you see there, that's the most your liability policy will ever pay. So the most in any one claim is $1 million for this liability policy. So in essence, you could have three $1 million claims, and then I need to go out and find another liability carrier. I've been doing this for 15 years on the brokerage side and 8 years on the carrier side. I've yet to run into that problem. You also have personal and advertising injury coverage here. That's libel and slander. Products completed operations. This would be if the city's ever, serving food at a concession stand, things like that, someone gets ill from food poisoning. The school cafeterias, obviously. That's a classic example of a product completed operations exposure. And then store backup. When we have a store backup issue here in the city, that falls under your property damage liability. You have upwards of $1 million of coverage there. The issue with store backup is obviously we have a fair number, high frequency here, although it has slowed down in recent years. Over the years, the carrier has implemented a $10,000 store backup deductible. So you have a store backup deductible on your liability coverage. Other liability claims have no deductible that applies. Also on liability, property is pretty cut and dried. You have a building, we can identify it, has an address, we put a value on it. It ties in a little bit with the assessed value, but it's a little bit different with insurance value. Liability is broader, and much broader in a sense. Any activity that is within the budget of the city of Peabody is picked up within your liability. So the dog park you mentioned, Mike and Mary are very good about keeping myself and my staff apprised of what's happening in the city, but the dog park goes live, that's, I'm assuming it's within the city budget, it's included in your coverage. The bike trail, the bike path, the parks, that's all included within your liability coverage. Next page. And you have more coverages than what I'm going over here. I'm really going over the highlight, the big one, the big coverages. Automobile coverage. City-owned vehicles are covered for $1 million of liability that they cause should they be in an accident. They also have physical damage coverage, so damage to the actual vehicle itself, collision and comprehensive it's referred to, very similar to the coverage that you have on your personal vehicles. Keep in mind you have an umbrella policy for another $2 million that goes over this. You have approximately, actually exactly as of today, 268 vehicles on the city schedule. Counselor, you brought up a good question. It comes up quite a bit about people using their own vehicle on city business. The city has what we call hired and non-owned auto coverage. It's part of your auto policy. It's $1 million limit. And how this works is if you're using your own personal vehicle on city business, and God forbid you're in a serious accident, but you're in an accident, the first coverage that responds is your personal auto insurance or the employee's personal auto insurance. Should the accident be severe enough where it eats up their entire limit, the city's policy will drop down and get involved in compensating the victims involved in that accident. So you got to keep in mind here in the Commonwealth, you're required by law to have insurance. Doesn't mean that everyone does, but you're required by law to have it. The minimum limits you are to carry, I believe, you could carry limits, I believe, as low as $25,000 or $30,000 per accident. So it's safe to say there are some underinsured or underinsured folks out there, could be on your staffs, and if they are in an accident, they could burn through their personal insurance pretty quickly, and that's where the city's policy would come into play. I've yet to see a hired and non-owned auto claim come in through the city. I've had it happen with other clients, though. And quite frankly, it's usually a horrific accident, so it's not the best of circumstances, but there is protection there. The last page, some of the key points, and I made some of these points in the course of the brief presentation, but again, your properties are insured on a blanket basis at a total limit of $303 million, almost $304 million. The vacant buildings are not part of that blanket, and as I said, it's just they're a higher hazard exposure that the standard insurance markets really just don't want to get involved in. We can insure them, they just have to be insured differently. Liability for vacant buildings, sometimes this gets missed, but these vacant buildings are owned by the city of Peabody. They're within the city of Peabody's budget. Liability arising out of a vacant building is picked up in your liability coverage. For 70 Endicott Street's a good example. We've had vacant building coverage on that building for years, many, many, many years. And just this past year, it was decided that, you know what, we're not as worried about the building anymore. And I'm sure you folks were probably involved in that decision. But Mike and Mary came to me, we discussed it as well. I said, look, you're paying upwards of $5,000 or $6,000 just to insure that building. It would probably be a blessing if it, I'd hate to say it, if it could go away and no one gets hurt in the process. It'd probably be great. I know there's some environmental issues out there too, perhaps, but liability arising out of that building is included. You're covered for that. So if someone goes in there, kid goes in there, falls, gets hurt, you're protected. Claims. The city does have a lot of claims, but it's not an unusual number. And quite frankly, you guys are very, very diligent about reporting incidents that occur, regardless of whether they turn into a claim or not. Potholes come to mind, road defect as we call them in my business. And it doesn't penalize the city to report these claims, but I have a separate report over there that we don't need to get into, but it's 206 pages, and that's the claims that have been reported to the carrier over the last 4 years. And frequency and severity are the two aspects of claims that we key in on. Pothole claims, there's frequency, but there's not a lot of dollars paid out. Again, with this, I know this can be tough with your constituents, I realize that. And this goes with your SOAR claims as well. The city can't be held responsible for something that they didn't have notification of or enough time to fix the situation. So your DPW folks have a very well laid out plan on taking in reports of potholes, and then they get out and fix them. And the law states that, you know, you have a reasonable amount, the city has a reasonable amount of time to rectify the situation. So I know it can be a tough situation, but it's a great question. What's reasonable? 2 weeks gets bantered about, but it can vary. And if the person with the blown tire, broken rim wants to push it, they can, you know, get lawyers involved. Sometimes you'll see a claim get paid, and they'll argue this whole aspect of what's reasonable. But 2 weeks is generally what's reasonable. And your DPW usually gets the holes fixed. We live in New England, we have an aging infrastructure, so it's tough to be held responsible for it. If you knew of the pothole and didn't fix it in a reasonable time, it's going to be tough to find the city responsible for it. Sewer backups are probably even more difficult than potholes, and I won't go into great detail on sewer backup, but similar to a pothole, unless you're aware that there's a problem on that line, it's difficult for the city to be held responsible. So, loss mitigation. You know, how do you slow down the claims? How do you? I can tell you, even though you don't see a lot of dollars paid out on potholes, I applaud the city on having a good process for accepting a report, putting it on the maintenance list, and getting it out and getting it filled. I don't see where you can improve much there. I didn't touch really in any detail on the auto. You do have a fair number of auto claims. Knock on wood, luckily nothing catastrophic. But you're running 268 vehicles in a congested area. And you have, you know, the DPW is running about 68 vehicles. The DPW, the police, schools, and fire account for about 80% or 85% of those 268 vehicles. Obviously, your police force, those guys are on the road all the time, and they have to drive aggressively at times. You know, we see claims across the city. It's not just the police, quite frankly. But the claims aren't severe from an auto standpoint. The tough thing about auto, though, is how do you predict when, you know, the minor claim isn't going to be a major claim? It's tough to, you know, the actuaries that stand way behind what I do, as far as predicting losses, that's one of the tougher things for them to figure out when's the next big claim going to hit. But from an auto standpoint, mitigating auto losses, auto training is something that we've offered in the past. The carrier Argonaut can do it. I know we've been in conversations, I believe, with the police chief to try to get something going there. Mary usually coordinates an Insurance 101 session, which we do in this room, with a bunch of the city departments, and that's more of just an overall, not only safety awareness, but insurance awareness, just, you know, be good about reporting incidents as they occur. As I mentioned earlier, the city is very good about reporting potential claims to us. And you know, it's a lot of insurance claims goes back to human behavior too, which goes back to the Insurance 101, which is just making people aware of, you know, be safe out there, as they say.
Councilor Walsh?
Yeah, thank you, Mr. Chairman, and thank you for the presentation. I do have a few questions. I'd like to start with the auto insurance for the person using their personal vehicle. Do you find there are any instances where a claim is made by a person using their vehicle, and not necessarily Peabody, but in any municipality, where the insurer would say, you were on city business, therefore they are the ones who are liable, and that they would not pay? Meaning, let's for instance, right, say I have Hanover Insurance, and I'm an employee of the city, I'm in a car accident, and if I file a claim and they say, well, wait a minute, you were on city business, therefore the city's insurer should be paying this claim, not us. Do you find that occurs?
No, we don't. What can happen, and this goes into it pretty deep, but the insurer could look at that employee and start that, or could look at that insured. So let's say it's yourself, and say, "Oh, geez, counselor, you're a city councilor, and you are, how often are you driving on city business?" And within the personal insurance rating mechanism, they can recode you to occasional business use, which basically could tick up your rate just a little bit on personal lines. So they would not affect you for coverage, but they might charge you a little bit more after they found that out.
All right. On the buildings, there were several you mentioned, again, using the example of 2 Washington Street and then 70 Endicott, which are vacant buildings. What is a premium on that?
2 Washington, hold on just a moment. 2 Washington, there's 2 vacant buildings out there, the main house and the carriage house. The property coverage there is $4,405. That's for 1 year.
And Endicott Street?
Endicott Street, we do not have property coverage at Endicott Street, at 70 Endicott. That's included within the city's liability coverage, though. So a lawsuit arising out of Endicott Street is covered.
Okay. And in an instance where we are a landlord, how does that work? Does the tenant have to have insurance, or are we covering?
The city is covered for their interest in there as a landlord. Ideally, you should have when you have a tenant, you should require them to be insuring themselves, and ideally, they should be naming the city as additional insured.
Mr. Chairman, through you, how does that protect us? What's the benefit of that, just so I understand?
Yep. No, good question. So let's say someone walks into this insured's business, of which the city is the landlord, the insured is the business. Someone slips and falls in their store. If they have insurance, it should pay to cover that slip and fall. And then this person says, you know what? The city owns this building. I'm going to go after the landlord. If you're named additional insured on his policy, we tender the claim back to that tenant. Where it gets a little fuzzy is outside, the sidewalk, for example. That usually falls to the landlord. But
Okay.
it can be spelled out in the lease, too.
All right. Just a couple more questions, Mr. Chairman. On the sewer claims, you stated that it's stated here that it's a $10,000
Per claim.
per claim. When is the last time that was adjusted? And was that instituted because you had a significant amount of claims from the city of Peabody?
Correct.
Okay.
Correct.
And when's the last time that was adjusted?
As far
As when
when
we put the limit of $10,000 per claim,
Yes.
when was that instituted?
That was instituted about 5 years ago, I believe. It was after a particularly tough year of sewer claims. And you have a pretty regular, they've slowed down a little bit, but I hate to say that, because it does come in fits and starts, and a lot of it is, if we get a heavy rainstorm, it can trigger a few things, so.
Right, it just seems to me that $10,000 may not be enough. We just had a discussion on the values of property, and a lot of the claims were on homes that had finished basements. It seems to me that that's a total gut, which in some cases may exceed the $10,000. What happens in a case like that? They just get 10 and you're on your own after that?
No, the city absorbs the first 10,000, and then we pay above 10,000. Yeah, so it's.
Okay, so it's not the claim itself, it's more of a deductible.
Correct.
I'm sorry, okay.
No problem.
All right, and I just did have one more here. How often are our policies reviewed and adjusted?
We look at them every year. We go through a process. We've started it already. Your renewal comes up on 8/31, as you folks probably know. But we're in the middle of the process right now. And there's not a lot of insurance carriers that, quite frankly, do a good job insuring municipalities in the Commonwealth. We're with one of them. Trident is the name, Argonaut's the name of the insurer. Trident's the program. Maya is another one. Obviously, the city's health insurance, I believe, is with Maya. Maya has looked at your business as recently as last year. They declined the property casualty side of Peabody, and it's nothing against Peabody. Peabody's a little bit big for Maya, but we still have ongoing conversations with them, and there's certain parts of Peabody that Maya can't do. They have a tough time with Brooksby Farm, and believe it or not, they have a tough time with the golf course. Yeah, imagine that insurance company doesn't like a golf course, but it happens. And then there's the Glatfelter Insurance Group, who has a program with American Alternative. And then Travelers, you did get a quote from Travelers last year for part of your program. So there's really, I consider, two major players, Argonaut and Maya, and then the Glatfelter program and Travelers are smaller players. Obviously, Travelers is probably a name you folks all recognize because it's a quote-unquote standard market, but the other companies, the companies you're with, are no less solvent or powerful than Travelers.
Okay, Mr. Chairman, just one last thing, if you don't mind, and that is...
That's about the fourth last thing you said.
No, it's actually the second one.
It's okay.
The discussion touched upon ways to save money through training programs and whatnot. Are those programs offered through the insurance companies, or are those things that the city would have to seek out from other vendors?
No, your insurer, Argonaut, and the program administrator, Trident, and even my own firm, but I really will defer to Trident on this, they have loss control staff that can come out and provide training. They do not, if I'm reading a little bit into your question, they don't, it's not like we come out and have training and you get a 10% discount, though. It doesn't work that way. It's more of come out, do the training, and then the discount would come as claim results improve. So it's not like a automatic, show up for class and you get 10% off.
Thank you, Councilor Walsh. Did I see Councilor Gould raise his hand?
Yes, please, just a quick question. I apologize, I forget your last name, but it is Mike, right?
Yeah, Mike and
Can
McShane.
I address you as Mike? Is that okay?
Yes, absolutely.
Mike, we often, as a body, get entangled in lawsuits because we, in the course of our job, we've been sued a number of times. Can you refresh our memory, or can you refresh for the council what, I think it's under your group, what we're covered for liability-wise as a body?
Correct.
Please.
We have what we call public officials liability, and that covers you folks for actual or alleged wrongdoing in carrying out your public duty. We don't see a lot of these claims with the city, but they do happen on occasion. You have $1 million for any one claim, and then your umbrella of $2 million also goes over that. So there's plenty of coverage there. Obviously, as in the Commonwealth and as in most states, there are statutory protections too on how much someone can sue for. But
thank you, Mike. Thank you, Mr. Chairman.
Are there any other questions? Oh, Councilor Sinowitz.
Thank you, Mr. Chairman. This insurance talk is riveting.
You're all
wow.
awake, so congratulations.
I'll just be brief. I'll try to be. So let's talk about FEMA and how many properties we have that need flood insurance, as the police station, I'm sure the fire department does. We just leased a building over here that's in a flood zone, and I don't know if that, because those FEMA flood insurance premiums are quite steep. And I don't know if that was included in the triple net. So you'd probably add another $1,000 a month to the lease. I don't know what that deal was over there, but can you enlighten us on the FEMA policies? Because those were going skyrocketing
Sure.
through the roof.
Sure. I'm going to work backwards a little bit, though. The building you mentioned that you're leasing across the street, you don't own that building, or are you going to be responsible for insuring it?
Well, I think with triple net, we're responsible for everything.
So then, if it's where I believe it is, yeah, it's in a flood. we'll pull a flood determination on that, but that's likely in a flood zone, and we'll need flood insurance from FEMA. But your flood costs, you probably have read about it, maybe a little bit, heard about it in the news or read about it in the paper, but FEMA has been remapping flood zones, and it's gotten very, very strict. It's gotten very, very expensive. We've been working through this with Mary in that we've had to order flood determinations, which is basically almost a civil engineering type of a report, where an engineer will actually go out and determine the exact location of the building and how it falls in the flood zone. So the costs associated with flood have gone up over the years, and getting these flood determinations have been very important, because that's what we can go back to FEMA with, or really the National Flood Insurance Program with, and say, hey, this building is either no longer in a flood zone or it's not in as severe of a flood zone. But 41 Lowell Street, the Central Fire Station, the current flood premium on that building is $15,312.
Nice. What's the police station?
The police station is $11,915.
Nice. Was Endicott, well, in terms of Endicott Street, that building, that property, I don't know, that's at the bottom of the hill, is that?
We're not insuring the property there.
We're not insuring it? So let's talk about Endicott Street. We're covered under the city policy.
For liability, yes.
For liability. So when somebody broke into the building and ripped out an oil line and flooded into the basement and into the water, what did that cost us? Was there limits on the liability and we had to pay above it? We were never told.
Pollution falls out of general liability coverage, pollution coverage like that.
So we own that?
Yeah, I wasn't even aware of that issue, actually. When did that?
Yeah, that was probably 2009, 2010, somewhere in that area. There was no one in the building, and somebody broke in to steal the copper pipes, ripped it out, and there was a half full, a half empty oil tank in the building, and it flooded the ground. That was, and it was quite a cleanup, and
We've taken a look at standalone pollution coverage in the past renewal cycles for the city. It does get a little bit pricey, but it's something we can entertain.
Okay, and the water treatment plant.
Oh, yeah.
So what's the deal on that one? So we have insurance?
You have building coverage for $9.5 million for the structure itself. That includes the pumps within the building. And I was speaking with Councilor Martin a little bit before the meeting. The tricky part of this claim is the extra expense involved. Namely, the city has $1 million, what we call extra expense coverage, which are expenses that occur because the claim happened, that you have to all of a sudden spend money to mitigate the loss. Obviously, the water rate from the MWRA to keep water flowing into the city, that ticker rolls pretty quickly. And that $1 million will likely get eaten up pretty quickly. So we have $1 million of extra expense to go towards that. The damages to the building, keep in mind you have $9.5 million of building coverage there, but we have this blanket limit that can go well beyond the $9.5 million should it go higher. At this point, we have a bi-weekly claim call with all the parties involved in this claim, myself, my claim staff, the carrier claim staff, and Mike and Mary. And it's a moving target, but it's reserved right now at about $2.3 million.
What does that 2.3 million mean? Let's do it on a monthly basis. Maybe we can figure out what's the water bill going to be. You said 2.3. What is that 2.3? Is that for the year you're estimating?
That's what the carrier has up for a reserve. That's what they think this is going to cost, based on the building damage, the pump damage, and I believe they're putting $1 million of the extra expense into that as well. So
okay. So anything above that figure on the MWRA water, that's what our exposure is.
Correct.
And
correct.
Has there been an estimate of what our exposure is going to be?
I would defer to Mike or Mary on the MWRA aspect of that.
The estimated additional water use for MWRA is approximately $250,000 a month. We started in March. We hope to be back online in October. So 8 months, you're talking $2 million.
And we've covered for $1 million, and so we'll be out $1 million? Is that what if it's ready by October? If it's ready to be operational. I think, thank you.
Thank you, Council Walsh, for bringing this up and bringing it before us. Thank you, everyone, for your questions this evening. In the interest of time, where we're already way overdue,
Thank you.
I'm going to ask for a motion to adjourn.